I'm on another level, keep up. On another level, straight up.
Welcome back, everyone. We are back with another episode of Self-Made CEOs. We are here to help existing business owners and aspiring business owners to be more educated, more inspired, and more motivated. With me, I have Elizabeth Cannon.
Hi, thanks, Irina. Yes, my name is Elizabeth Cannon. I'm the owner and founder of Zena Financial Services. We're a commercial finance brokerage located in Chula Vista, California. Irina, do you want to tell them what you do?
Well, I wear many hats. But
Literally.
Yes, literally. Digital Dive Marketing is a marketing agency specifically focused on the financial markets, the financial sectors. And let's role play for a second. So I'm a business owner and, I need some funding. I brought on a new employee or I need some funding for marketing. What do I do in order to be able to get some capital?
Yeah, that is a great question. And you're absolutely right. There is so much information out there. It can be very overwhelming, and it's not even the kind of thing that you can Google and get clear answers. You start Googling business funding, and a bunch of ads will pop up for different companies, and so you'll be super overwhelmed because like the first 20 pages of Google is just a bunch of different companies trying to tell you why you should use theirs, why it's the best. They don't really explain what the difference is or anything like that. So I guess, Irina, the first question I would have is, what's the money for? So you mentioned you want to advertise, you want to bring on another employee?
Yes, let's just go with that scenario. And I'm growing my business and I need some working capital, right? I need something to help kind of boost and I need to interject some money into my marketing. So, obviously if I keep doing what I've been doing, I'm going to keep getting what I've been getting, but I want to grow. I want to expand. I want to scale. I want to bring on an expert. So where would I start?
Okay, yes. So I guess the first question I would ask you is, how much money are you looking for? And are you going to need more in the future?
So it's hard because I don't know what I would need in this scenario, but just to keep this going, I would say I would like the possibility of getting more money. So while I may not be looking for a huge amount, I would like maybe say $20,000, $30,000, but I would like to be able to, if I need more, to be able to get more money.
Great. So I think in that case, we would really want to look into a line of credit for your business. So just to kind of preface this, lines of credit are based on several factors for underwriters in commercial lending. It's going to be based on your time in business, your personal credit as an owner, and what your monthly revenue looks like. So there would be essentially three things we need to get started. We would need, a credit application from you to be able to pull your credit, do a soft pull, kind of see what we're working with. If you have ownership documents that show how long you've been in business, and then your last 3 months bank statement. So that's really all we would need to get started. Now, lines of credit can be the most difficult to qualify for, but they're super beneficial in that they are revolving. So, you said to me right now you need about $20,000, but let's say I collected your information, your credit application, and your last 2 months bank statements, and your ownership documents with your time in business, and you qualify for $50,000. Well, the great news is all you need to do is take $20,000 right now, and then your payment terms are going to be based on your repayment terms are going to be based on the $20,000. Now, let's say you get through that $20,000, and now you're expanding again. So now you have access to the $50,000 line. So it really does create that peace of mind that the money is always there. You can draw on it multiple times, depending on the lender that you're going to. So you don't even always necessarily need to pay back the full amount first before you can do another draw. You just will have different payment terms each time you draw. So, but that would be where I would want to get started with you so that you have access to 30,000 more, or maybe in the meantime, before you draw the money, maybe something else comes up that you need to invest in, and you end up, deciding you need more money.
And you did mention at another call that we had that this is money that you can use towards anything. So even though you originally needed to use it for marketing or whatever, right? If another business need pops up that's really important that you need to cover, it's, you could use that towards other business expenses.
Yes. And so what I would recommend is always using this towards your intangibles, things like advertising, payroll, expansion, bringing on another employee. There's different types of financing for like hard assets. We'll get into that another day, but I would just say keep this as like liquid capital for your business. Don't use this money to, buy equipment or anything like that. Keep it on your intangible expenses for your business.
And so what happens if someone doesn't qualify for a line of credit? Do they have any other options? We are talking about alternative lending. So essentially what happens is, you go to your bank and for whatever reason, you weren't able to get that money that you needed. That's when you would probably, try and go the line of credit route. And when that doesn't pan out, what's the next step?
Yeah, absolutely. And you're right. Sometimes it is a little bit more difficult to qualify for a traditional bank loan. They have a lot more strict underwriting criteria, time in business, and things like that. So alternative financing does allow for looser underwriting criteria, less restriction on industries and type of business. We don't really need to use original documents. You can pretty much get a loan online from application to funding documents completely online. You don't need to meet anyone face to face or bring original paperwork. So we just get that out of the way. But if you don't qualify for a line of credit, the next best thing I would recommend would be a term loan. And they can be a little bit easier to qualify for. The difference is that with a line of credit, you have an amount that you can continually draw on and pay back. A term loan is a one-time deal. So it's like an installment loan. So if you told me I need $20,000 and I submit your documents to the lender and I find out you have $50,000, well, you have a decision to make. I can either take the $20,000 I know I need right now, or I can take a little bit more, or I can take the whole amount. But if you do end up needing more money after the fact, you will have to reapply again and it will be a separate loan.
So with every time that you are, using a loan and you're paying it back, is that like the same as, growing your like credit score personally? There's like a business credit score?
There's different entities that will report your business credit. Sometimes you kind of have to fight with them to make sure they're reporting it. But yeah, if you do build business credit, hopefully at some point when you are looking for different types of financing for your business, you can get it as it's corporate only, meaning no one person or individual had to guarantee it with their personal credit. So it does help you build, your business credit when you have these. And then the other thing that it has, it has some possible tax benefits. I always say this, I'm not a tax expert, consult your tax advisor, but the interest on these types of loans is generally tax deductible on your business tax return. And I always say, why use your own money when you can use someone else's? And in the case of like advertising, if you want to get advertising through Irina's business and you take a loan through my business, you can write off the interest on the loan, and you can also write off the advertising. And you didn't use your own money. You didn't put your own personal assets at risk. You're using literally someone else's money to make money and to save money. So in that aspect, sometimes it can be a no-brainer.
I'm on another level, keep up. On another level, straight up.